In this video, guys, we're going to look at 3 simple tricks to make better trading decisions. Stay tuned. Hey traders and investors, a very warm welcome to you. This is one for traders and investors. The title is to make better trading decisions, but also to make better investment decisions in the stock market. All right, so we know what it's like, okay? We come into a trade, we look at it, we're analyzing it, we're in like a swing trade, day trade, whatever, where most of us are making our decisions based on charts. We see the chart up there and we go, right, we want to make a decision on that. The chart comes up and immediately we've got a bias. Okay, immediately we've got a decision. As long as short is nothing. Okay, we need to ignore that first impression. We usually get a first impression in less time than it takes to kind of blink an eye, milliseconds basically, immediately, and it's served us well in the real world, right? We go out there, we see someone immediately, we're like, I don't like the look at you, or I like the look at you, I don't look at you, whatever it is, and we often use that as a gauge, and it's served us well over evolution because something, I don't look at that animal, looks a bit angry, I'm going to stay away so I don't get my head bitten off, or oh, that looks like a juicy piece of fruit, I'm going to have a look at that and bite that. You get the point. Same with trading, guys. We can utilize it, but at the same time, we need to be very cautious. We sometimes have a bias based on our first impression. Chart comes up, oh, that's really overbought, that is, that's been running on for a while. And we often anchor our decision making from that. I know I do, I look at a chart and I see it going up, and immediately I think, where's the short play? Where's the short play in this? And it's just something because I'm used to trading, counter trading, contrarian from a day trading perspective, that's what I'm looking for. But if we're swing trading, the chart is up, it needs to ignore that and say, you know what, this is a bullish trend. Do I need to adjust my thinking on this instead of looking to fade this, which is obviously the bad, wrong thing to be doing until I see evidence of it? Where's the pullback to buy? How do I get on board this move? How far has it gone? Do I need to just not be in it at all? Do I need to change my thinking rather than just being so focused? So you see the point. We automatically make a decision. We automatically have a first impression based on the first time we see it. Ignore it. Get rid of it. Reset things. Then you can start to analyze it. Then you can start to say, hey, this is a great long trade. This is a great short trade. This matches up with my strategy. This is this, this is that. Once you start to do that, you can move to point 2. And point 2 is being open-minded to the other side. Now, this is a fine line, guys. You've got to have conviction in your trade when you take the trade because you want to stay in it. You don't want to be scared out by the slightest bit of bias against you. However, when you are assessing whether to buy a stock, sell short a stock, whatever it may be, index, whatever, a market, commodity, currency pair, it doesn't matter. You need to look at it objectively. You need to say, hey, is there any reason that this is a good long? Is there any reason that this is a good short? What is the bear argument for this trade? What is the bullish argument for this trade? You can give an argument for both sides. You can say, hey, the bullish argument for this is it's been uptrending and we're in uptrend and the moving averages are, the fast moving averages are above the slow, we're not overbought yet, blah, blah, blah. Your bearish argument could be, hey, we've been rallying for the past 2 months. We're now very close to resistance. The main markets, you get the point. You can build up a thing. Then it's your job as a trader to say, hey, the bullish argument way outweighs the bearish argument. I now look for a trade to go long. Or do you know what? I've actually analyzed both sides. Initially, I thought it was bullish. I kind of ignored that. I looked at it. I looked for long trades. Now I see the bearish argument is pretty good for it. I'm going to pass. I'm going to find something where I've assessed both. And you know what? The argument, bullish argument, is so strong, I can't help but want to take the trade. So very often as traders, we don't do that. We just go, yeah, you know what? I think it's very bullish when we go in. Now, obviously, when we're in the trade, we need to keep that conviction and we're still reviewing the trade and we're still doing this and our price levels and what have you. However, at the beginning of the trade, it pays dividends for us to make sure that we're looking at both sides of the coin. Being open-minded. Right, number 3, use of filters and checklists. This will help you make better trading decisions, reducing that cognitive load on your brain. If you're constantly looking at stuff and you're constantly having to check all the small things that can be done on an automated fashion or can be done in an easy fashion, i.e., you know what, I want to take longs that are not overbought. Just for example's sake, a very technical, easy way to filter. So I just filter out anything that has an RSI above 70 or whatever it may be, whatever kind of tool you're using. And I want to see stuff that's at 52-week highs. I want to see stuff that's got a high short flow. You can use tools to give you that filter. Or if you just want to use a checklist. So there's certain criteria. So you're looking at charts, you immediately can say, hey, is the price above the moving average? Yes. Is this? Yes. Is it got volume? Yes. Okay, now I can look for it. Rather than, just three very, very simple things that don't really require much decision making. So instead of looking at the whole thing, assessing it, saying this, that, and the other, and then finally saying, well, actually the moving average is this, just having very simple checklists to run through that actually qualify that as something that you want to further look at. So these are three very simple things, guys, ignoring your first impressions so that you can cancel that, look at it objectively, allow yourself to be open-minded to the other side of the trade, because that will open your eyes to the very best trades, which is what we all want to take. We don't want to take marginal trades, we want to take the best trades that we can and give us the highest probability of success. And number three, using filters and checklists to take the cognitive load away from us for the very simple filtering process, whether that is automated or whether it is manual, so we can use our brain power for the more interesting stuff, like where's the risk reward ratio, where do I pull the trigger on this, where would my entry be on this, how much do I have to risk, where's my stop going to be, that kind of stuff that requires more of a trader's mindset than just simple stuff that is it over a moving average or is it overbought, either oversold. All right, guys, three things. Stick yours in the comment section below. Thumbs up if you like this kind of stuff. Appreciate the support. Take care. Good trading. Bye-bye.